Apple is one of the most valuable and influential companies in the world, dominating the consumer electronics, software, and services markets. Founded in 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne, Apple started as a personal computer company before transforming into a global technology empire. Today, Apple's ecosystem extends far beyond the iPhone, Mac, and iPad. It now includes wearables, digital services, artificial intelligence, and even financial products. Apple stock has been one of the best long-term investments of all time, delivering massive returns for shareholders. But with the company already worth trillions of dollars, many investors are asking, is Apple stock still a buy, or has it peaked? In this deep dive, we'll analyze Apple's business fundamentals, financial health, growth potential, risks, and long-term outlook. To understand why Apple is such a dominant force, we have to look at its business model. Unlike other tech companies that rely primarily on advertising or enterprise sales, Apple is centered around an ecosystem of premium hardware and software. The iPhone is the core of this ecosystem, driving revenue and customer loyalty. Apple users who buy an iPhone often go on to purchase Macs, iPads, Apple Watches, and AirPods, further locking them into the ecosystem. This creates a sticky customer base. Once you're inside Apple's walled garden, it's hard to leave. But Apple's business isn't just about selling devices, it's about recurring revenue from services. Over the past decade, Apple has aggressively expanded into high-margin digital services like Apple Music, iCloud, the App Store, Apple Pay, and Apple TV+. The services segment has become one of the fastest-growing and most profitable parts of Apple's business, contributing a large percentage of total revenue. Unlike hardware sales, which can be cyclical, services generate consistent, recurring income, making Apple less dependent on iPhone upgrade cycles. Financially, Apple is one of the most profitable companies in history. It generates hundreds of billions in annual revenue, with profit margins that competitors can only dream of. Apple's ability to charge premium prices while keeping costs under control has made it a cash flow machine. The company holds massive cash reserves, allowing it to invest in innovation, buy back shares, and pay dividends. Apple's stock buyback program has been one of the most aggressive in the market, helping drive earnings per share, EPS growth, even when revenue growth slows. One of the biggest reasons to remain bullish on Apple is its ability to innovate and expand into new markets. While the iPhone remains the backbone of the company, Apple has been making big moves into artificial intelligence, augmented reality, and financial services. The Apple Vision Pro, Apple's entry into mixed reality, represents the company's first major new product category in years. While the initial adoption of AR/VR technology is expected to be slow, Apple has a history of turning niche products into mainstream successes. If augmented reality becomes the next big computing platform, Apple is positioned to lead the space. Artificial intelligence is another major growth driver. While companies like Microsoft, Google, and Nvidia have dominated the AI conversation, Apple is quietly integrating AI into its products. AI powers features like Siri, computational photography, app recommendations, and health tracking. Apple is also rumored to be working on advanced AI chips and generative AI models, which could play a huge role in future devices. Wearables and healthcare are other massive growth areas for Apple. The Apple Watch and AirPods have become billion-dollar product lines, proving that Apple can still innovate beyond the iPhone. More importantly, Apple is investing heavily in health technology, with the Apple Watch becoming a critical tool for heart health, fitness tracking, and medical research. As healthcare technology advances, Apple could play a major role in digital health, remote patient monitoring, and AI-powered diagnostics. Despite its strengths, Apple isn't without risks. One of the biggest concerns for investors is slowing iPhone sales. While Apple has an incredibly loyal customer base, the smartphone market is maturing, and upgrade cycles are getting longer. Many consumers are holding onto their iPhones for 3 to 4 years, rather than upgrading every 1 to 2 years, like they used to. If iPhone sales decline, Apple will need to rely more on services, wearables, and new product categories to drive growth. Another major risk is China. Apple relies heavily on China for both manufacturing and sales. However, geopolitical tensions, trade restrictions, and growing competition from Chinese brands pose a threat. The Chinese government has been pushing consumers toward domestic brands like Huawei, and any escalation in US-China relations could negatively impact Apple's business. Regulation is another potential headwind. Governments worldwide are increasing antitrust scrutiny on big tech companies, and Apple's control over the App Store has been a major point of controversy. Lawsuits and regulatory actions could force Apple to change its App Store policies, potentially impacting its high-margin services revenue. So, is Apple stock a buy, sell, or hold? If you're a long-term investor, Apple remains one of the safest and most resilient companies in the market. Its strong cash flow, brand loyalty, and growing services business make it a solid core holding in any portfolio. However, at its current valuation, Apple isn't cheap. If you're looking for a high-growth stock, Apple may not deliver explosive gains in the near term. For investors who already own Apple stock and have large gains, it might make sense to trim your position if you believe the stock is overvalued. However, if you're a long-term believer in Apple's ability to innovate, holding on to the stock and reinvesting dividends could be a great strategy. If you're considering buying Apple stock now, one approach could be dollar-cost averaging, buying small amounts over time, rather than making a single large purchase. This helps reduce the risk of buying at a market peak. At the end of the day, Apple is more than just a tech company. It's an ecosystem that billions of people rely on daily. Whether it's the iPhone, Mac, Apple Watch, or AI-powered software, Apple has built a business model that is incredibly difficult to disrupt. While growth may slow compared to previous decades, Apple remains a dominant force in technology, with plenty of room for expansion. What do you think about Apple stock? Is it still a buy, or has it reached its peak? Drop a comment below. I'd love to hear your thoughts. If you found this video helpful, hit that like button, subscribe, and turn on notifications for more investing insights. Thanks for watching, and I'll see you in the next one.